أهلا بيكم في بودكاست كربون. معاكم أحمد رجب. Welcome in a new episode from the Carbon podcast, and as usual we have the top-notch experts in oil and gas and petrochemical industry, and in this episode we are very much happy for receiving two experts in oil and gas and petrochemical industry. Welcome Nicolas and Uwe. I'm so happy that we have you here today with us in Carbon podcast, and I'm sure that this will be a very good episode, and we will deliver a lot of interesting topics and a lot of information and knowledge to all the audience. So welcome here in the Carbon podcast here.
Thanks for having us, Hamid. It's a real pleasure to be with you.
Absolutely, Ahmed. Thank you.
Thank you. So allow me just to give a small introduction about the experts that we have today. So we have Dr. Nicolas. He's a veteran of the petrochemical industry with more than 30 years experience in polymer and chemical products, with a profound understanding of refining and chemical processes. He have been working with companies like BASF, LyondellBasell, Aramco, and Tasnia in Saudi Arabia. And also he had set his grand purpose to throw light on and bring transparency in the energy and the carbon sector. And also we have Uwe with over 25 years of experience in the energy and petrochemical industry as well. He has held the finance roles ranging from analyst to the C-level at a major companies such as the BP, Enios, and the Saudi Aramco as well. Has specialized in optimizing process in data research and data modeling and analytics to better understand and tackle the industry challenges. So this will be a very good chance to have such a good experts and a very high level experts with us today to start our episode today. So let's switch the gears and start our episode. So I think the main episode today will be talking about the new challenges and the shifts and the changes around the oil and gas refineries and petrochemical. And we need to take that chance to have the insights and the opinion from the experts for sure. So let's switch the gears and start our episode. And with all the challenges that we have right now in the globally around the world, many challenges that we have from the pollution, the carbon neutrality, many regulations coming with many governments around the world. Also the geopolitics changes around the world as well. So all of these challenges that pushing back into the energy sector, especially the oil and gas and petrochemical. So let me start with our first question today. The refinery became the ocean, especially in the naphtha and gasoline. So we need to highlight the shift, what's happening, especially with the electric vehicle shifts, especially in Europe and now in China. Also, the US, they are shifting to the electric vehicle, and this market is growing more and more day after day. So, and we are seeing that some refineries facing some issues on the naphtha and gasoline part. And now many new refineries, they are trying to integrate with the petrochemical, especially with the naphtha cracker, just to maximize the benefit and to work on the added value more. So we need to highlight this new challenge coming to the market as a game changer, the role of the electric vehicle and all the changes coming to especially the refinery. So we need to hear your opinion on that regards here.
Uwe, you want to start with that?
Yeah, let's take it from my view, what I see. Nicola and myself, we're doing a lot of research following our work in the Middle East, where we worked very closely with the downstream organizations in Saudi Aramco and saw what was happening in other operations in the Middle East. And what we have been noticing then was clearly the talk was about integrating refineries, cut basically the route from the crude oil into the petrochemicals, optimize that, and get the maximum output for of crude in versus petrochemicals out, have the best ratio available. that was a certain trend. That was a major trend that we have been seeing some years ago. But now, as you mentioned, Ahmed, the talk is about electric vehicles and the impact on demand. And the interesting, maybe also scary situation now is many of the major players, they are reviewing almost all of their refineries to either shut them down, reduce capacities, or even more, look how they can convert them into bio refineries to produce bio petrol products. We will be talking about SAF products later on. So that is what I'm seeing right now. We've just recently saw that Esso has been stepping out of a refinery in France. Shell is reviewing all the refineries in Europe. So it will be for the major players. It will be interesting. Important is what are still working refineries they can use for cash flow going forward, and which ones provide an opportunity to convert into integrated refineries or expand whatever is possible. And the other one is what is the potential for biorefineries going in there. So the market is in a big upheaval right now with interesting opportunities, but a lot of players coming under pressure how to deal with the changes in demand and the pressure that is coming from the environment. Nicola, I'll hand over to you.
So I will maybe take it at a higher level. We are talking about refining, so we are talking about oil refining. Yeah, a refinery. The role of a refinery is to convert oil because the oil goes into the refinery. Every single drop of oil that is being used anywhere in the world first passes through the refinery and first enters in the distillation unit to be fractionated, and then the fractions, they are getting converted in the refinery, and you can have more or less complexity in the refineries, and the products that the refinery makes is mostly fuels. So some of the oil is used as a fuel to power the refinery, to fire the refinery, to produce energy for the different processes in the refinery, and a small fraction of the oil that is converted is then going into chemical manufacturing chemical products, making oil polymerization and so on. Yeah? But the majority of it becomes fuels. Gasoline, diesel, aviation fuels, marine fuels as well. And this is where we need to have a look at the shifts happening today. And these shifts, they are happening based on policy. There are many policy-driven shifts based on taxations, carbon credits, mandates to use biofuels, and so on. They are also based on shift in the type of energy that is used in various economic segments. We talk about electric cars, for example. Yeah. So and we have to realize what is the real impact of electric cars on shifting energy consumption away from fuels. Yeah. But the themselves, the electric cars, the growth in sales of electric cars, like in Europe, as you mentioned, is also policy driven.
Sure.
As we observe now, what is happening in Europe, you have a reduction in sales of electric cars this year because the economy is not doing well. So as the economy turns back and you have lower sales of electric cars and the reduction in sales that is much stronger than for conventional cars. People have been scared into believing that their market will disappear, all electric cars, so all gasoline cars or IC, internal combustion engine vehicles will disappear because the regulation that by 2030 in Europe, for example, the sales of fuel vehicles will not be authorized. And now this has already been revised. So in Europe, you will be allowed to sell fuel vehicles if they use synthetic fuels or something like that.
Mm, mm,
The policy itself is changing with time. Yeah,
yeah,
there is a big trend in China where we see that electric car sales are growing very fast. I think they make more than 40% of the sales today. But we have
almost.
to take this in comparison with the total sales of cars. If the total sales of electric vehicles is still growing, and if that is not adding an additional demand for fossil fuels, for gasoline, for diesel vehicles, yeah, and I believe the shift is not as fast as one could figure out from
Mm,
these impressive figures on the growth of electric vehicle sales at the global level, because in many regions you will still have increasing sales of cars, cars were running with diesel or gasoline, and trucks, and it will be very difficult to shift fuel consumption in for aviation. Yeah, we'll discuss about it a little bit later. For trucks, for transports, long range transports will be very difficult to switch that to electric trucks, for example. Yeah,
yeah,
I hardly see this happening. And what we see in terms of oil demand today is exceeding 100 billion barrels, 100 million barrels of oil per day. Yeah.
mm,
And it's growing year after year against the forecast of most international agencies or consulting companies, who are predicting that oil will be peaking in the next 5 years or in the next 10 years. And oil peak, it was before an oil production peak, yeah, that was peddled for since the beginning of the 20th centuries. And in the past couple of years now, people are talking, because the peak production never happened,
yeah,
are talking about peak demand for oil. Yeah, and myself, I don't see this happening. Yeah, so I belong to the very few people who believe that this scaremongering scenarios are
mm,
not really going to happen before a couple of decades, because oil demand will continue to increase at a diminishing rate, but it will continue to rise because of increasing fuel demand across the globe, due to the continuous growth in population size, yeah, due
mm,
to the emerging of a world middle class, especially in high growth areas like India, Africa, many countries in Asia. Yeah? And in the aggregate,
mm,
you will see oil demand still growing, I believe, for many decades to come. And the peak oil demand may not happen before
mm,
maybe 30 or 40 years, most probably,
yeah.
with the addition of my estimate 1 million barrels of oil per day of demand year after year. Yeah.
Yeah, yeah, very clear. I think yeah, I'm fully agree on that. Especially the yeah, maybe the market of the electric vehicle, as you mentioned, yeah, it is growing, but still the numbers maybe like best driven the people that okay, it is growing, but not that much that like fully replace the conventional or the combustion
Mm.
engine cars for sure. Yeah. So
It's an
let
additional demand that is coming for energy.
exactly. Yeah,
So
yeah,
you have energy addition to the
yeah.
global energy demand. So electric vehicle may displace a fraction of the demand for
Mm,
oil, for fuels, but it comes in addition to the rising energy demand of the world. So we have to realize that most of the world finds itself into an energy famine. So there is not enough energy supply in many countries of the world that could have a much stronger economic growth. Yeah, if energy demand was being deployed in many countries that have a very low level of energy consumption, actually.
But I believe you need to look at it by region. The electric cars, the demand, will be growing. I believe what we're seeing in Europe right now is private consumer. This is not by policy driven. If they drive an electric car, they will drive an electric car because it will be more convenient, it will be cheaper, and that isn't fully made out, fully understood yet what will be happening. I'm following what's happening in Germany. The demand has gone down because there has been some subsidies have been running out, and there has been the demand has been really peaked at some point because there were heavy subsidies. But people pick this up again. People will, when they need a new car, they will have to go back and say, now, what am I doing? And a lot of people tend to move towards electric cars. And the interesting one is, will they buy again an electric car? So the final game is not made out, but overall sentiment, in my view, is that it will start replacing conventional cars in big numbers. That is my view. It may be happening slower than some enthusiasts think in that sense, but it will be happening. And we can see in Europe already what's happening on the supply side. Refiners are all changing. What I mentioned in the beginning, the refiners are all under huge pressure from the demand side, also because they cannot export their products anymore as they used to. The other side is, do we understand China? There is growing cars, but what was it in the last 12 months or last year? There was a higher registration of electric vehicles than petrol vehicles. So it isn't yet made out what's really happening there. And another impact, of course, will be customs. So we haven't talked about the US. What will really be the impact in the US also after the elections? It will probably be there may be people encouraged to continue with petrol cars because the energy will become cheaper on that side. But you're just keeping one major supplier out, the Chinese out with heavy duties. Is that the end game? Not in my view. So I'm deviating from Nicolas' view here. I believe refiners will come stronger under pressure in the future. Policies, whatever's happening on policies, will not change, will not, in the long term, will not impact customer behavior in this. If the electric vehicles become more attractive, and they're becoming more and more attractive, individuals, clients will move towards that and buy these cars. So that is something that needs to be much better understood from that side. And then obviously, what will be the impact on the refiners? I'm certainly with Nicolas on heavy vehicles. They will continue to be for quite a while have to be supplied by diesel. So that has to come from somewhere. Marine industry, that will certainly for a long time also be dependent on diesel or move to gas. That's the other side. The side of it. So there will still be a demand from the industrial side, industrial customers, and that will also grow in certain areas. But I'm seeing a shift. I'm expecting a shift on the electric vehicles, which will provide quite some headache or challenges to the refining industry going forward.
So what is happening in China? I think we can figure it out. Yeah, China has. We talk about refining. China consumes much more oil than they are producing. So they are importing a lot of oil.
Right.
Yeah. On the other side, they have rich a lot of resources. So they have all the metals that go into the energy metals that go into battery making. Yeah. They have, I think, they control 90% or so of the world resources for energy metals. So, and they are trying to secure their energy supply. So they want to become energy independent. And that's the reason why they have been building, manufacturing so many electric cars.
Yeah,
because that rendered them independent from oil they need to purchase from other countries, from other regions. Yeah, and by the same token, they have been building massive power plant based on coal. Yeah, they are burning coal for producing energy. Because they have a lot of coal. Yeah, and this is what is happening in China. So many electric cars are because they have the resources for it, and they want to get their energy security and get independent from other suppliers of oil.
You are absolutely correct. I can transfer the image not only from China but also east of Asia, like in Japan and Southeast Asia. And the policy here is they are giving a lot of intensive, like for the people, like a lot of intensive, like or incentive, like they are encouraging the people to shift to the electric cars, like with the lower lower prices, and they are giving like some flexibility on those. And what I have seen, especially in the Southeast Asia and also in Japan, that the usage of the public transportation, like the buses, now it is electric buses, which is really, I was like fascinated by that one. Like even the public transportation now it is using the electric vehicle, which is the electric buses. And they are trying, as you mentioned, that maybe they are trying to uh, displace or replace the conventional combustion engines with the electric vehicle. Yeah. But yeah, they are encouraging, and the government in China and also in Southeast Asia, they are really pushing and they are really encouraging to shift to the electric vehicle because of the shortage of oil, as you mentioned.
Yeah.
And
that's the main motive. Yeah. And I believe if you look at other regions that have enough oil supply, that shift may not be happening that fast. So when Uwe says it's not because of incentives, I believe, of course it is. In Europe, you have you get a rebate, so you get money. I don't know how you call it. So you have a scheme for for your car. They're subsidized. Yeah, you have subsidies for when you buy an electric car. Yeah, and it makes a lot of sense if you can charge your battery at home and you have a low electricity price. Yeah? But then one should figure out that most of the driving happens during the day. Yeah? So, which is not the case with a fossil fuel car, with a petrol car. A petrol car, so the driving happens also during the day, but the fuel does not need to be produced when you use your car. Yeah, and we have seen the energy crisis in Europe, where the prices have increased so fast. Yeah, that actually it becomes unprofitable to drive an electric car, and when you charge your car on a charger on the road. And people have made comparison, and you see that the electricity bill for charging your car comes out more expensive than the cost of refueling your car with gasoline or diesel. So maybe people will have one electric car for short trips or for city driving, but for long drives they will have a second car. Yeah. So I believe this is the trend that is happening. Yeah, people may buy an electric car as an additional vehicle, but will still have a petrol car for normal driving.
Yeah. Actually, this takes me to the another challenge as we are talking about the electric cars and shifting to electric vehicles, and the main purpose for that one for sure is reducing the carbon emission. So let's talk about the another like pushback or another challenge that I'm seeing in the refinery and also in the petrochemical, that the new regulations and the new laws, mainly by many governments around the world. It's a global, like a global agreement. This is like reducing the carbon emissions and also the sustainability and the energy saving and all of this stories that has been the headlines for the last couple of years. And all the government, I think they are pushing all the energy sector to reduce the energy and also reduce the carbon emission and all with the new regulation, as I mentioned. And on that particular topic here, also the energy, I'm talking about the natural gas, especially. Natural gas prices are getting higher and higher, which is making the operating the refineries and petrochemical became more and more, maybe not profitable, but so this is another challenge that we need to talk about, especially in Europe, as you mentioned. And you just published today that ExxonMobil has like already sold another refinery, and I'm seeing many other refineries are shutting down, especially in Europe.
Yeah.
I also like from my background, which is I'm working on.
Why are they shutting down? That's the real question. Yeah?
Exactly, yeah,
Yeah?
exactly, yeah. So I
Because
think
they are old refineries. Yeah, they are maybe they don't have the critical size, and Europe has not so much, Western Europe especially has not so much oil, so they need to import oil, yeah, for their refineries. You have the oil from the North Sea, and there in the UK, I think the profit of oil production from the North Sea, oil production, yeah, in the UK is taxed something. They have again increased the tax rate on the profits from oil production to, I think, 78%, something like that. Yeah. So
oh,
you can figure out that oil production in Europe is disincentivized, and you need to buy oil on the market. Yeah. And then, of course, as you don't have your own supply, it's not profitable to run your refinery, especially if it's a small size older refinery that has not the critical size to be profitable.
yeah, yeah.
I'm with Nicolas on this. If you look at European refineries, you can probably very quickly come to an assessment which ones can survive around this one, can survive on just the old business model of importing the crude oil, for which they need a really nice jetty terminal just outside their gates to bring the oil in. And others which are inland and currently faced from the demand constraints or the demand restraints which are out there. It is becoming very difficult in that, and it doesn't fit anymore in the model of these big major oil companies as they were. Refineries are being handed down to the specialists, and even there the challenge is, can they survive in such a model? Can smaller companies with less overhead and focus on cost reduction, can they make it feasible to continue with this? Possibly. On the chemical side, we've seen this very often, that companies like Ineos, their business model was to go in and reduce the costs and optimize processes and continue to run petrochemical companies, and similar models are now being applied on the refinery side. And the big companies concentrate on refineries here, Exxon in Fawley here on the channel, BP in Rotterdam, and others in that region there. But others are coming under very high challenge. And also, Nicolas alluded to this already, the ones that had access to Russian oil had some advantage, but that's also is becoming a bit limited and constrained. So there's further challenges we can also see in Eastern Europe.
I see. So I think, yeah, the main, maybe the main challenge again, but I'm seeing that from another, like an operating plant, that the prices of the natural gas, the increasing the prices of the natural gas, that which is raising year over year, which is really pushing the I would say the economics along the refineries and even the chemical and petrochemical as well. So maybe this is the another contributor in the affecting the profitability of many like corporates like Shell, ExxonMobil, and so on. Even in use, I'm seeing they're shutting many chemical and petrochemical plants.
So the increase in natural gas as another cause, which is the switch, the shift from pipeline gas to LNG,
Yeah. Mhm.
which makes it immediately more expensive by a factor of 4 or 5. Yeah, because you need a liquefaction terminal, you need a special LNG vessels to transport the gas, liquid gas, and then you need a regasification terminal at the other end, and you can also store the gas in liquid form, and all of this is extremely expensive. Whereas when we have a pipeline, a gas pipeline, the gas is very, very cheap. And there is no shortage of natural gas actually in the world. Yeah, it's made up by disrupting the supply of gas delivered by a pipeline. Yeah?
Yeah, fully agree. Again, there is some other challenge that we may need to highlight as well, which is the new regulation regarding the carbon emissions and achieving the carbon neutrality across the world. And you can see some countries has been committed to achieve that in 2050. Some countries shifted that to 2060, and who knows, maybe 2070 in some countries. But with those like new regulations, and I would say it is really limiting and putting more push or more stress on the refineries and petrochemical. They need to reduce the
Yeah.
carbon neutrality.
First of all, how do you define carbon neutrality?
It's a little bit tricky actually to define that one. Are we really reducing the carbon neutrality or reducing the carbon emission, or we just shifted from our better limit to another plant, right? So this is like it's like a game that I really don't understand it so far, like about the carbon neutrality. So I would like to hear from you about your like perspective about the carbon neutrality or the carbon emission. Yeah.
Yeah, maybe Uwe can say something. If I comment on this, that would be probably much too controversial.
I'm. You don't need to follow what's happening in the US. Not just follow that. You also, if you just have a look in what's happening in Europe right now, the economy is in a very different place than when these objectives were set. When people talked about carbon neutrality in 2030, 2040, 2050, whatever they had, and like Germany said, we want to be even better and we want to achieve this 5 years before. And that was all done at a time when things were looking bright and there was no war in the Ukraine, and Germany could work with Russian gas coming in, etc. And that's not working anymore. That is coming under huge pressure to not be the poster boy anymore, like for Germany, and saying we want to be better than this. That's just not sustainable. So that is happening in Germany. The European Union targets, in my view, will also come under pressure to not that it is not achievable, or it's just going to impact the economy in a way that is not sustainable going forward. So that's just the European view. The other one is also about carbon neutrality. Yes, what is it? That doesn't always mean reducing. That also means offsetting. So what
Yeah,
is the
exactly.
UAE doing? It's buying land in Africa and planting trees there. That's not, in my view, that is not a way to go ultimately. So we should be reducing CO2. I'm absolutely for this one, but it needs to be done in a sustainable manner in itself, because nobody is being helped by targets that cannot be achieved And what's happening in Germany, that manufacturing plants are shutting down. Investments are not happening. There will be unemployment. It will have an impact on the political situation. And then we will see in Europe, well, we're seeing it already with the rise of populist parties. They will certainly put a huge pressure on the Paris agreements. If not that they wanted to leave it. We're not there yet in Europe, but if the outcome in the US is if Mr. Trump is president, they're going to exit again the Paris Accord. So, in my view, the objectives as they stand, they will not be realized for when they have initially been set in a way. And I think it's just the price for it is too high. That by itself. So CO2 reduction is good. A lot of these initiatives individually in the industries, in individual operations, what we're seeing, they are great. The move towards electric vehicles, I think, is a great one. But how this is being done globally and what they want to achieve, I don't think that the path they've entered is completely deviating right now into multiple directions.
So I think there are two aspects in terms of neutrality. There is climate neutrality and there is carbon emission. So carbon emission, CO2 emission, carbon dioxide emission neutrality. So we must first make the assumption that the climate is warming because of CO2, that the climate warming is bad for the planet, and that the CO2 emission increase is responsible for this climate variations. Yeah, and that mankind is responsible for that. Okay, let's accept that. Yeah, let's say it's the case. That's the situation. All of that is true. Then there is carbon neutrality. We want to reduce carbon emissions, so CO2 emissions. Fossil fuels, so oil and coal and gas, they make 86%. I wrote an article on the blog on Portfolio Planning Plus. All fossil fuels together, they make 86% of the energy demand. Yeah, and it's only declining in percentage, in relative value, marginally over time, because other energy sources are growing. Yeah? But the decline is very, very slow. And in absolute value, fossil fuel use for producing energy continues to increase. So if we want to talk about carbon neutrality, we should, on the contrary, reduce energy production from fossil fuels. And this is not happening.
Right.
So what will the impact of any policy measures on the consumption of fossil fuels across the world? I don't believe it will be significant or it will be sufficient to dampen the growth in fossil fuel demand over the next decades.
Yeah, I fully agree. To be honest, from my perspective, I'm seeing that we are trying to heal the symptoms, not the real disease. So, as you mentioned, that we need to kill at the source. Like we should shift to another source of energy rather than the fossil fuel. So this is the main thing. So let's track back our topic here. So with all the challenges and facing all the industry globally, so from your perspective and from your opinion, that what should be the strategy that we should follow, the companies, corporates, and countries as well? What are the strategies? And by using the word strategy, because I know that this is a very flexible word and it can be used on a very broad way. But what I mean, the strategy came with a plan, with tactics as well. What should be the strategy for all the corporates to overcome all of these challenges, like from the cost of energy and the new regulation? So from your perspective, I need to hear from your side as well. What should be the strategy for the corporate team?
So maybe
Uwe, I think you have something.
Yeah. I let Uwe introduce that from our perspective?
That is a very broad question, and this is an energy podcast. Companies need to develop strategies in line with, let's use the classic ones, shareholder value, government regulations, but here it starts already. Depends on the markets you're operating in. You have varying government regulations. Maybe the only big one is that you want to reduce emissions. So you cannot just build anywhere in the world, I believe, anymore a plant and ignore that completely. So you will have to have a strategy, and your shareholders would also tell you on any valuation will say here you're not following global targets, you're not following global sentiments in reducing CO2 and carbon neutrality, etc. So companies from a very high level, they will have to develop strategies towards carbon neutrality, and everybody does. We're doing this, Nicola and myself. We're looking at companies globally. We're looking at their website reports and reading their annual reports. All of them have strategies towards carbon neutrality and what they want to do. So maybe that is really a common factor they need to work on. Just how they realize that and implement that. There's very different ways to do this, and there's very different ways by region how you want to do that one. And it may lead also, well, it does lead to putting the right focus in. And a company that is operating in Europe will have a different focus on that, and will look for energy reduction, will look to optimize costs and becoming, well, at least having options. Clearly, with the fallout or the Russian supplies have fallen away, there's a very different situation that companies need to deal with that, and then refocus their activities. A simple model of having access to affordable or competitive feedstock, be it gas or crude, and just convert that and making cash from gasoline and getting some bit of higher value out of the petrochemical side. That is not enough anymore. So you need to have a much clearer focus, and we're seeing this. The big majors exiting non-competitive refineries and refocusing what value creation they do from crude or feedstock, classic feedstock, gas and crude. What they're doing from there, and evaluating what they do on renewable energies. And that is another question. Should even be an oil major, should it be in renewables? Is an oil major the right company to operate wind farms in the North Sea? Why are they doing that? Because they have some expertise, because they have financial means to do it, but are they the right ones to do it? That is maybe a separate question. So just to come back, in my view, companies need to define a certain goal, how they can still play the game of satisfying shareholders, and doing that together with government regulations or global expectations around the environment. And that's a different view in Europe to what you have like in the Middle East. If we look at Saudi Aramco or ADNOC, and to name them, they will follow a different strategy in that they have the feedstock, but they have the means to go into the downstream side and continue with projects in Asia and continue with investments in Europe as well. Exactly. And then, have their own path towards the carbon neutrality. Difficult, very challenging. As I mentioned before, you cannot do this by planting trees in Africa. That is not happening. But they can apply a different strategy, and there's again we're seeing the big shift of these companies investing in chemical activities globally. They have been buying companies in Europe, and that's only starting, in my view. We will see a lot of interest coming from Middle Eastern money into Europe or investments in China on the chemical side. So, as I said, you can go into each market, you can go differently in there. We haven't even talked about hydrogen yet, but each company needs to sharpen their strategy and their profile and work out what the strengths are and in which direction they can go. But we're not at the end yet of the discussion. What is the right direction? What I mentioned with, do majors really need to be in renewables? That is a question to have, or a discussion to have, and follow what they're doing and putting maybe side by side and see what the majors do in order to survive in this new environment globally.
So I believe that who controls the energy controls the economy, and the development of energy supply in many countries and regions has been suppressed by those countries who are controlling the energy sources, especially the supply of fossil fuels, of oil, gas, and coal. And the world, as I mentioned before, is really in an energy famine in many countries. There is huge demand for energy. In many countries, they even have vast resources. Let's take Venezuela, Canada, Argentina, some African countries, Nigeria, and so on. They have really huge amount of oil available, for example, they could develop. You have hydroelectric power, you have many different possibilities in different countries of the world. Nuclear plant building, for example, to supply energy in energy poor countries. And so there is no bad energy source. So the world demands more energy, and this additional energy supply should be a mix of all possible energy sources according to their affordability, availability, scalability, and versatility. Where can I deploy a certain type of energy production that will help my economy grow, and be less dependent on the buying of energy from other countries, from other regions. And from that perspective, I believe we will see continuous growth in energy demand. I have also in the blog article I mentioned before highlighted a very unique trend that on the very long term, since maybe almost 200 years, the energy demand is constant per capita. But as the population is growing, energy demand is growing with the population size. And so what is improving with time is energy efficiency, how efficient we use the existing energy, and the total energy production to satisfy the demand from a global population that is continuing to grow. So that's why we will see continuous growth in energy production, in energy demand, and in all type of energy sources. Is it fuels? Is it electricity? Is it diesel, gasoline, marine fuel, aviation fuel, and so on? And you will have the diversification and the penetration of different sources of energy. We can think of solar, wind, hydropower, hydrothermal energy, and so on. So everything will be growing, but fossil fuel consumption will continue to grow as well to satisfy this insatiable demand for energy of the world.
I'm fully agree, but from my perspective, I will talk from like the very downstream, like in the polymer industry.
Yeah.
When we got like some consultation about the some companies, they're facing some issues in the profitability. So I think the magic word is the diversification, especially the diversification in the product portfolio. As you mentioned, that maybe we need to think about to diversify the product portfolio for like a polymer section, that they need to look at what are the high demand on a certain grades or a certain application. So those chemical or petrochemical companies, they need to fulfill those kind of markets. The other thing that right now, and I'm seeing that really trending and really growing, that many companies, big companies, which some of them are shutting down in some places in the world, without saying some names, they are shifting those plants, which is shut down already, I would say, to the Middle East, some African countries, and also to some Asian country, to overcome a couple of things. This is like from the consultation that we are giving, like the low wages, the low labor wages for sure in Asia. So this can be the strategy for some companies, just to shut down the plants in Europe or in the US and shift the company back to Africa or Southeast Asia to overcome like the cost of
That's
energy, yeah, the labor cost. Uh, I would say many other things like the regulation on the carbon emission as well, because I would say it's still too soon, especially in Southeast Asia, to talk about the carbon neutrality and so on. And also in the African countries, it is still too soon to like put more regulation and more restriction on the carbon emissions. So this can be kind of a strategy, but it's a little bit short term because it will come sooner or later. Yeah,
I'm not sure. It's happening. Yeah, it's happening
it is.
since many years. Let's take, for example, polyester
Mm.
manufacturing.
Yeah,
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 where does the polyester come from? Yeah, it comes from the aromatic complex in a refinery,
right, right,
right?
right.
And what has been happening in that space? Yeah? You have
Mm.
seen Chinese companies building mega plants because these polyester manufacturing plants, and especially the textile plant as well, yeah, made with polyester fibers in textile are increasing their share of the total fiber market. Yeah, um, steadily. Yeah, so it's exceeding 50%. I think it's maybe 55, 60% today. And all over types of, you can only find synthetic textiles, yeah, when you buy clothes and so on. And all is made with polyester, almost in Europe at least. All is imported. Yeah, so you import the polyester from China because they have built this mega refinery integrated downstream, or it's even the polyester companies, polyester manufacturers, who have integrated upstream into refining. That's
Right,
quite
right.
unique. What has been happening in China? Yeah,
Yeah, yeah,
and these plants, they are really mega plants. You cannot run a small polyester plant, a small polyester fiber manufacturing. It must be a mega factory. Yeah, and as a consequence, you have no polyester manufacturing in Europe. It has almost all disappeared. Yeah? And Europe is importing all the textiles from China, is importing a lot of polyester from China. And that's why Europe is how should I say, is taking measures to recycle, yeah? Because Europe is not producing polyester.
mm,
So
mm,
what is the solution to avoid consuming or buying it outside of Europe? It's to recycle. Huh? So people believe that by recycling they will become independent in polymer supply, which cannot work, obviously.
yeah,
Yeah. So, but this is really the trend that is happening across the world. Yeah. So the mega factories for making chemicals, for making polymers, they are all being built in emerging countries, most of them. Yeah. So you see China, India building these mega refineries and the downstream plant integrated complex, building many polymerization plants, polyethylene, polypropylene, all you can imagine. Yeah, and the supply. And ExxonMobil, for example, is closing factories in Europe. Basel thinks of closing polyester manufacturing in Europe as well. So they all move away from Europe because it's not profitable anymore. And they are what will Europe do? Yeah, what will
Yeah.
Europe do is import
Yep.
polymers made in other regions.
It's correct. Yeah. Yeah.
And for me, in many ways, that's I don't know, almost logical, and it's the economies of scale, because you have the demand for the gasoline, so you can still build mega refineries, you can still run profitable mega refineries, you can produce the aromatics and the polyester from there. And yeah, in Europe can't do this anymore. So Europe will have to focus on different areas in the value chain. So either by recycling, and of course that cannot replace, but I don't think that's about replacing anything that's happening in China. That just has to be accepted. Like we're not bringing, well, maybe they try to bring some IT chips manufacturing back to Germany recently, but that has all fallen away because it's not easily profitable. It has to be heavily subsidized. So, and that is particularly not happening for products, low cost products, low value generation on the polyester side, on any of the polymer side. So, again, come back to companies, you have to focus on where can you generate money in the value chain, and big commodity products. That is not happening. That is certainly happening where you can build refineries at scale and produce a product that is cheaper that way. It's just different to what we had some decades ago, where it was all about cheaper labor, etc. That is not the issue. It's about energy. It's about availability of feedstock, and it's about size. In Europe, the looking at polymer imports, polyolefins imports, there was the threat for many years, but it hadn't happened because there was still the big demand in Far East, and whatever was produced in the Middle East was going to the Far East, so Europe could continue to run their polyolefins plants. But also that is changing now, because big capacities being built in the Middle East and also in China. So these products will find their way back into Europe, and again, it's putting pressure on the downstream petrochemical side to see what they can do, what different technologies they can use in Europe to produce still a profitable product. But these commodity products, that's gone to the Far East or in the Middle East, and yeah, certainly not coming back to Europe.
There is another very interesting story in the transportation sector. Yeah, so automotive. Yeah? So energy, in the energy sector, in the fuel sector, let's say. The sanctions have worked. Yeah, Russia was exporting fuels not only fuels, but crude oil and refined fuels to Europe. So crude oil to run the refineries in Europe, and refined fuels, yeah, for the energy sector and transportation sector. Now imports are not allowed anymore. But what is happening is Russia is exporting a lot of oil to India. India is refining the oil and is exporting refined fuels to Europe. So now what's the reaction? Okay, let's build electric cars. Let's use electric cars instead of petrol cars or fuel cars. Yeah, because then we'll become independent from fossil fuel suppliers. Well, China is building massive factories for and manufacturing a huge amount of electric cars that they are importing into Europe at a price which is 1/3 that maybe of the electric cars built in Europe. So what do? Oh, we tax electric car imported from China 50% or 100%, so that European car drivers will be forced to buy a European-made car, but at much higher price. Yeah? And this car will be powered with electricity, which is becoming very expensive as well. Because energy crisis in Europe and so on. So it's the same story actually. Yeah,
greatly. Yeah, it looks like uh, I don't want to say that, but like slipping in the infinite loop that we are trying to uh, push back. Like, okay, so we are raising the taxes on the electric vehicle from China just to enhance the local industry, let's say it that way. But on the other hand, Europe has a shortage like in energy, so they cannot like reduce the cost or something like this. So from like the conclusion from this discussion, like we have been discussing the challenges, and also right now we are discussing like about more the strategies. So we need to like at the end of part one of our two episodes, so we need to conclude that and put like some, how to say that, the forecast for the market. What will be the forecasting from your perspective as well, the forecast for the refinery and petrochemical markets? So we need to hear that, and I know that Uwe has a lot to like to add in that regards. Yeah.
Well, we talked about the directions from a very high level. Things are going, and I did elaborate already where what I'm seeing here, what's happening to refiners in Europe, and the US, in my view, is just waiting after the elections to refine or define their new strategies in which direction to go. And I'm, well, is it optimistic? I believe electric vehicles will continue to grow and will continue to dominate the agenda in many ways. It will have an impact on the refineries going forward. I just recently heard that Saudi Arabia is even thinking about
Yep.
producing cars. And in the
Yeah.
past, you would have looked at that and said, "Really, like building a combustion engine car? That would have been nonsense." But everybody seems to be capable to build an electric car now. So
True.
if we're seeing these things happening, and then I guess we will also see in Saudi Arabia electric loading stations very soon, and it will have an impact on the future of the refineries. But I'm not just seeing it too bleak. I just say find find the best value chain definition for the markets that come heavy under pressures, and others they can further develop and say, here we can run at capacity and we can make the money because the demand on the fuel side is there. But the other one we haven't talked about, and that would be an interesting subject maybe for another discussion, is conversion, integrating petrochemicals. Where's the conversion? What is happening with that? Because obviously you cannot shut down the refineries. That is not going to happen just because you need you need the naphtha supply into petrochemicals, or you need a good conversion technology to happen. So as I see, if look globally, I think the US is waiting, North America is waiting which direction to go, at least in the short term, to say is crude becoming so cheap they can just continue to run for another couple of years and produce the cash they need for conversion. Europe needs to be very flexible and needs to react to the current challenges it has. And China is buying it some time. They can certainly use any crude oil coming in for conversion into chemicals, and at the same time build electric cars, which will come to the global market if we like it or not. Maybe slower to Europe, and then they will export it to other countries that can afford a loading infrastructure. There are not that many maybe available yet, but the Chinese, I'm sure, can also help to develop that as well, and also develop renewable energy sources, nuclear, maybe even
Yep.
though that takes quite a while to do that one. So again, US, hold on, run for cash still for a while. Europe under massive pressure, and Asia still having enough outlets to accommodate more refineries. I agree on that. and to optimize them around the capacity.
So I mentioned before the scenario about oil demand growing 1 million barrel of oil per day additionally year after year. At the same time, I ran an analysis I published also on the blog, on PP Plus blog, on that topic, that you have also every year an estimate about 800,000 barrels of decommissioning, of refinery decommissioning. Yeah, so a small refinery, let's say 100,000 barrels per day. A mega refinery, the largest one, they are around 800,000. The biggest refinery, 800,000. You have even bigger than that, but they are made of several large refineries. Yeah, let's say one single standing refinery mega size is above 800,000 barrels per day. Small size is 100,000 or below. Yeah. And when you consider 800,000 barrels of decommissioning per year, it's the size of one mega refinery you have today in existence.
Yeah.
So add that to 1 million additional demand per year. So you have somewhere between 1.5 and 2 million barrels per day of additional refinery capacity, either through revamping or new build. Yeah, refineries that need to be deployed every year, year after year, additionally to the existing capacity. Yeah. So in these new refineries, or this revamping will make the refineries more efficient, energy efficient, maybe more environmentally friendly with lower emissions, because they are more efficient. Of course, when you use the fuels, the crude oil more efficiently, you have a lower ratio of emissions. Yeah. And they will use advanced technology and processes with larger capacity, which make them more efficient, by the way. Yeah, to make the products that we commonly make in a refinery, the fuels, the lubricants, the polymers, the chemicals, and so on.
Yeah, just to recap, yeah, and I think the forecast for the market, as you mentioned that I'm seeing Saudi Arabia is investing a lot in not in China, but in Asia overall, like in China and India and also in Southeast Asia. I think they are trying to, or Saudi Arabia trying to secure some like share of the market there, because in China and India, and especially China and Southeast Asia, they are really deploying that from land to hand. So like from the crude oil up to like the appliances, or even the EVs and everything. So you can see the full value chain in Southeast Asia. So I think Saudi Arabia trying to secure some market share, and instead of building, this is the recent news that they cancel the huge investment in some part of Saudi Arabia to build the chemical to, or sorry, to crude to chemical. They cancel this project and shift all the investment to China and India and Southeast Asia, just to secure a market share here. Yeah.
It depends if you are an oil producer or an oil consumer. Yeah, and Saudi Arabia is a smaller country in population terms. Yeah,
Right.
I think it's today maybe 36 million people. I have to check the latest figures, but it's a small country. So you cannot build multiple mega refinery with integrated petrochemical complexes and polymerization plant and so on, because you don't have the market on your own. You need to export these products. Yeah, and they have had a bad experience recently with the economic crisis in the recession in Europe. And they were looking where to export my products. Yeah, and many petrochemical companies in Saudi Arabia, they had a very bad results figures last year, because the prices of polymers and chemicals have collapsed, and they could export less than they were doing before because of this crisis, this recession in Europe, especially. So they were looking for other ways to export their products, like North America and so on. Yeah. But North America is more or less self-sufficient in polymer production, for example. And in China, they are building up, ramping up their capacity, their production capacity like crazy. So it's very difficult to export out of Saudi Arabia the converted products. What they do is what an oil producer should do, is selling their oil and securing the sales of their oil to the consumer of the oil, which are the refineries in China, in India, and in other countries.
Yeah, fully agree. So I think, to that point, I think this should be the pause, or we should be like ending our part one, or the first part of our episode. So thanks, Nicolas, and thanks, Uwe, for that one. Thank you.